To me, it's all about production in China. And Tesla doesn't have a demand problem. It has a supply problem. It could be on a run rate for 2 million vehicles as we go in 2023.
I bought an EV. I love my EV. I'll probably never drive an ICE vehicle again. I am bearish on Tesla for valuation, and I think Tesla is likely to give relative underperformance versus those other companies.
In this video, Dan Ives raises his Tesla stock price target. A Tesla bear once again embarrasses himself. Elon Musk hints at Tesla's astronomical future growth prospects. And a juicy development in the Elon Twitter bot saga. And before we get into it, if you want to instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. So first things first, great tweet here from James Stevenson. I cannot underscore enough on Twitter. Hey, Elon Musk, how long can Tesla revenue keep growing like this? James sharing one of his lovely charts. Let's zoom in on this one. First have a look at this and then see Elon's hilarious and rather telling response. What we're looking at here is Tesla's quarterly revenue in millions of dollars from inception to present day. Just to orient everyone on this chart, zoom in a little bit here. In 2009, Tesla did a whopping $73 million in revenue. 2010, 116. 2011, 204. Suddenly we can actually start seeing some of these numbers on the charts. In 2012, just under $420 million in revenue. In 2013, over $2 billion. In 2014, over $3 billion. In 2015, over $4 billion. And now things started to get rather juicy. These are broken down by quarterly revenue, Q1, 2, 3, and 4 from left to right. 2016, Tesla cracked $7 billion in annual revenue. In 2017, almost $12 billion. And notice, in 2017, Q1 and Q2 combined were in excess of Q1, 2, and 3 in 2016. The trend continues. In 2018, Tesla's revenue is so fucking gigantic, we literally need to zoom out or scroll across on this chart. Doubling, literally doubling from around $11.7 billion to $21.4 billion year over year. And again, the trend continues. In 2018, Q1, 2, and 3 revenue in excess of the entire year of 2017. I'm going to zoom out a little bit here for you guys and girls to actually see this properly. 2019 in the magenta here, $24.5 billion. 2020, $31.5 billion. And I want to note something interesting here. In 2020, and the light purple here, Q1 and Q2 combined, just the first 2 quarters of 2020, Tesla did more revenue in total than they did just a few years prior in 2017. And for the full year, Tesla did approximately 3 times, over $31 billion in revenue. 3 times the revenue they did in the full year in 2017. In 2021, things get truly absurd. As we can see here, Q1 and Q2 of 2021 themselves in excess of the entire year in 2018. Here's where things get fucking bananas. In 2022, year to date, Q1 plus Q2, Tesla did more revenue in just the first half of this year than they did in the entirety of 2020. Wait a minute, did I really just say that? Yes, I did just say that because it's true. Tesla's revenue growth is accelerating. Tesla has doubled their revenue based on an annualized rate between 2020 and 2022. If we rewind just a little bit, it was taking 3-4 plus years for Tesla to double their revenue. Now it's taking 2, something to consider. And again, just to put this in context, Tesla's Q1 and Q2 2022 revenue combined is almost as much as Tesla did in the first 3 quarters of 2021. And by the way, thanks to James, absolute legend, for creating these charts. I think this is one of the best ways visually to show Tesla's stunning, and I mean stunning, growth. Find another company at these kind of scales growing even close to this rate. I'm just kidding, you won't. Don't waste your time. So back to the tweet. Elon responded to this. It is safe to say that our output will not exceed the mass of the known universe. For some reason, that kind of sounds a little bit familiar. If you're a regular viewer of the channel, you'll know exactly what I'm referring to in this tweet. That awkward moment when Elon dwarfs my past comments that Tesla's growth would start bumping up against the laws of physics and be limited by the amount of matter and energy available in our solar system. Why do I think so small? Clearly, Elon really does understand the magic of thinking big. Here's me, tongue-in-cheek, suggesting that Tesla's going to be limited by how much stuff's available in our local area, our solar system, and Elon's not thinking about our solar system, nor our galaxy, but the entire fucking universe. It just goes to show, and obviously his comments are a little tongue-in-cheek, but this is really interesting to hear. Again, think of another CEO of any company who's producing products, anything at all, that's talking like Elon here. And again, I do want to emphasize the whole discussion around Tesla's spot and scaling up the global economy. When Elon asked the question out loud, is there a limit? Is there an arbitrary limitation to the size of the global economy? and follows up his own rhetorical question with, maybe not. In short, I think it's fair to say that Tesla has rather ambitious goals, and Elon Musk really is thinking about gigantic future scale. The kind of scale that if you even said it out loud today, people would laugh you off the internet. See you guys in 2042 and 2069, and let's see what happened.
Joining us now is Dan Ives, Managing Director of Equity Research at Wedbush. Hey there, Dan. So good to have you. We have lots to talk about today, but let's start with Tesla because it's currently down about 1%, trading around 294 right now. It's been a long time since I've seen Tesla trade at these levels, but obviously that 3-for-1 stock split went into effect and you updated your price target. Your pre-split target was 1,000. That would have been 333 a share, but now you updated it to 360. So why the bump, Dan?
I'll take that one. Why did he do it? Well, because I said he would do it and he didn't want me to be wrong. I'm sure he'll remember me recently predicting literally exactly what would happen. Dan Ives is going to incrementally increase his Tesla price target many times throughout the rest of this year. Probably a strategy to remain in the news and to stay relevant. Now, I'm not hating on Dan here, but I called it and I'm continuing to call it. Watch. I guarantee you guys, there's going to be multiple, and I mean multiple price target updates from Ives. As Tesla moves higher, he's going to bump his price target incrementally, just little ones here and there. We're back in the media. Oh, price target's a little bit higher now. Why is your price target higher now? Oh, well, you know, demand is a bit better than we thought. Progress in China is a bit better than we thought. Blah, blah, blah. It's going to continue to happen. But like I said, I'm not a hater. This is a great strategy to get your face in the media, promote your company. I totally understand. I would prefer analysts to be setting a price target they believe is realistic over the next 12 months rather than one that they know is going to be overtaken very soon so they can come back and give it another bump and blah, 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 blah.
Yeah, I mean, look, to me, it's all about production in China. And Tesla doesn't have a demand problem. It has a supply problem. They're starting to ramp significantly in China. And I think that's important to the story. And I think as we go into the second half of this year in 2023, it could be on a run rate for 2 million vehicles as we go in 2023.
Ives is absolutely correct on this. Tesla easily 2+ million run rate at the end of this year. I just want to point something out. Again, you'll hear people all the time, Tesla's valuation doesn't make sense. We might even hear that later in today's video. Everyone's always comparing Tesla's unit volume per year to the world's largest automotive manufacturers who, give or take, peak at about 10 million units per year. Tesla's run rate is at 2 million. They're only a 5x away from 10. Let's think about that a different way. If you go from 2 to 4, you double it once, you're already at 4. Double it again, you're at 8. You're almost at 10 million from 2 doublings from where we are today. So keep that in mind. In the coming years, the arguments, Tesla's valuation compared to Toyota VW doesn't make sense. We're going to see them dissolve in real time. When Tesla hits 5 million annual units, what's the argument then? Well, Tesla's only half of Toyota and Volkswagen. Spoiler alert. And I do mean spoiler alert. By the time Tesla's at around 5 million units of annual production, I'm not sure they've quite figured it out yet, but Toyota and Volkswagen will be nowhere near their previous peaks of about 10 million units per year. Their sales are going to be collapsing, at least their ICE sales. At the same time, they'll be struggling to ramp up EVs. There's going to be a gaping void in the middle, the valley of death, as some have called it. These same moronic valuation arguments comparing Tesla to Toyota and Volkswagen were being made when Tesla was a tenth of their current production capacity. Give or take, call it 150 to 200,000 units per year. The arguments didn't make any sense at the time because of their growth rate, but put that to the side. We're still hearing these arguments today, but they won't be around much longer.
And I think, in my opinion, that's the reason that you stay bullish on Tesla, because of what's really changed in the production side.
So Tesla hasn't had a supply problem, or hasn't had a demand problem. It's always been about this supply problem. But how are you thinking about demand heading into the end of the year, given the global economic slowdown that we're seeing?
Yeah, look, in demand, around the edges, you'll clearly see softness. But even if we cut demand by 5, even 10%, I mean, demand would still outstrip supply going into mid-2023.
Once again, Ives is right. Tesla has a supply, not a demand problem. And I do just want to remind folks, because this is a really important point from Ives. He's very confident that even if demand for vehicles was cut, slashed, fell by 10+%, Tesla would still sell every vehicle they make. This is true. Back in early 2020, when people were full panic mode thinking the entire world was ending, I predicted that Tesla would still sell every vehicle they make despite a collapse in demand. Why? Again, goes back to supply. They cannot produce enough vehicles, nowhere near enough vehicles. They've never been able to produce anywhere near enough vehicles to satisfy existing demand. Story of Tesla's life as a company. And this isn't going to change anytime soon. Now, some people might argue, well, Stephen, how can you possibly say that, you moron? They're ramping up Austin and Berlin, and Shanghai's growing more, and Fremont. Well, here's the thing. As Tesla continues to ramp up production and drive their costs down even further, that was the clue, drive their costs down even further, they have the flexibility, if they need to, of dramatically lowering prices while still maintaining industry-leading margins. So by the time Tesla's producing 2, 3, 4, 5+ million vehicles per year, many people today will think, well, that's surely enough to meet the demand. Well, maybe it would be at today's prices, but they're not going to be at today's prices. This is really important to understand. Again, the caveat there, prices will come down and they will also introduce new, even lower price models. In short, Tesla's massive supply problem is likely to last the next decade or more.
And of course, if you look at the efficiency and the margin structure, specifically out of China, and now with Berlin and Austin ramping in 2023, I mean, the margin story really starts to take further hold as we go into the next 12 to 18 months. So that's my view of Tesla, is that as we go into the second half, you're really going to start to see more momentum, because now they're going to be able to fulfill those orders, which they couldn't do really the last 2 years.
And just quickly, in terms of the stock split, are you looking at that as a bullish catalyst still, or was that already priced in? Because obviously it does make it cheaper for the retail investor.
Yeah, I think that's when obviously retail continues to like that in terms of stock splits. But I think some of that's priced in, and ultimately, fundamentally, that's what's going to drive the stock higher, not necessarily the stock split.
Okay, so I want to get your take on the Twitter whistleblower and what it could mean for Tesla head Elon Musk in that deal. Do you think he's more likely to be able to back out of the deal, get a cheaper price for the deal? How do you think this all plays out, Dan?
Now, for those of you who aren't aware of the whole Twitter whistleblower thing, I mean, I saw this coming, not this particular whistleblower, but this particular issue being exposed during this whole potential acquisition from Elon Musk, and here we fucking are. I highly recommend some homework. Check out the All In podcast. There's some great discussion from this. David Sachs and the guys discussing this very issue. It does not look good for Twitter. Let's just leave it at that.
Look, I think going in, it felt like Twitter, and I think they still do, has a pretty ironclad hold in terms of upper hand going into Delaware court case. But look, I do think it changes the calculus in terms of what we saw on the Zacco claim. And I think for Musk, it gives him a leg to stand on. And he ultimately buys Twitter at probably a renegotiated $50 to $51. That's sort of our view in terms of where this ultimately goes. And I think maybe this could potentially just give him more, I'd say leverage as they go into those negotiations potentially.
I agree. As I've been saying from day one, I really do think this deal completes. Elon really wants the transaction to complete. He really does want to uphold the principles of free speech, and buying Twitter is the easiest and most seamless way for him to do that. But he doesn't want to get fucked in the ass, and if Twitter's been lying to the SEC, committing securities fraud, downplaying the number of bots, or coming up with some ridiculous methodology so it looks like there's less bots than there really are, well, he is within his rights to walk from the deal or renegotiate at a lower price. My expectation is a lower price and a settlement before this ends up in the courts, because if it does end up in the court system, Twitter's going to get exposed if, of course, it turns out that they have been, well, maybe slightly less than honest or completely transparent about the number of bots on their platform. I don't think Twitter wants to end up in court with fact-finding taking place, because they'll need to substantiate these claims, and if it turns out they can't substantiate the claims, well, next minute, oops, we accidentally, repeatedly committed securities fraud. Now, I'm not making accusations here, I'm just saying if it turns out that they have been committing securities fraud, which definitely would never happen. No company's ever done that. That's why the SEC doesn't even exist. But if they had been, they certainly wouldn't want to end up in court, because it probably wouldn't end well for them. So I expect they're going to negotiate a settlement outside of court lower than the originally agreed upon price. But I could be wrong. So
you think the deal will go through? I just want you to repeat your price in which you think that it will go through.
Yeah, so we have Twitter, $50 price target. It's our view the deal does happen at a renegotiated price. And that's why that stock continues to trade on deal dynamics rather than fundamentals.
Yeah, Twitter down about less than 1% today, trading around 40.48, but essentially you think it will go through for $4.20, less than Musk initially proposed. All right.
Meantime, take a look at Tesla. Keep your eye on it, dipping a bit lower. It is the first day trading after splitting 3-for-1. Shareholders received 2 additional shares for each one they already owned as of August 17th. Company split 5-for-1 in August 2020. Stocks up better than 165% since then. Joining us today, Craig Irwin, Roth Capital Senior Research Analyst, who I think, Craig, fair to say you remain wary because of valuation still?
I am bearish on Tesla for valuation. Huge admiration for what they've done, but I think there's a lot of other properties people can go and put money to work in and make a lot of money over the next many years. And I think Tesla is likely to give relative underperformance versus those other companies.
I'd love to know the companies Craig believes are going to outperform Tesla, at least relatively speaking, in the coming years. Can you guys remind me, check back in a couple of years' time, just to make sure? Maybe Craig's right. Maybe it's true. Maybe Ford and Rivian and Government Motors and whichever other companies he believes are going to outperform actually will. But I'll be very surprised. The gall of this guy to say out loud that Tesla is likely to underperform in the coming years. I mean, remember, the internet never forgets. Craig knows that. He knows these comments aren't disappearing. You won't be able to hide from them in a few years' time.
We've talked a lot about splits last few weeks, but again today, is there a sense net whether or not, I mean, is it a wash? Is it net bullish? Is it net bearish? How do you view the Tesla in the 200s rather than the 900s?
So usually what it is, it's an indication that management's themselves excited about further value creation, right? Tesla's going to be doing 40,000 cars, making 40,000 cars a week by the end of the year. Their capacity jumped to 1.9 million units in the second quarter. So they're obviously executing impeccably, right? So they want to hold on to the valuation. They want to make it easy for retail to buy the stock because retail is such a large component of the shareholder base in Tesla, such a large driver of the valuation. So, functionally, yeah, it makes sense for them to do this. And typically large cap stocks, when they're splitting, do perform pretty well. We're just skeptical because we see a lot of really good things on the horizon. You just talked about Plug. There's many other companies in the EV space that are doing really exciting things.
Now, not to nitpick, but could you guys help me out here? I'm not actually aware of any companies at all outside of Tesla in the EV space who are doing anything that I would describe as exciting. Don't get me wrong. Many of them are trying, but building the foundational building block of artificial general intelligence, deploying insane examples of real-world AI, FSDB to 10.69, scaling up virtual power plants, humanoid robots, growing at a faster rate than anything else of their size in the history of planet Earth apart from your girlfriend. Who else is doing anything that comes close to this in terms of exciting? I mean, I'm open. Please let me know in the comments below.
And Tesla's done the heavy lifting, the hard work, making it much easier for them. And frankly, they're able to poach employees from Tesla and execute business plans with less risk and more capacity available in the market.
Mike?
Yeah, I mean, I totally agree that part of what keeps Tesla where it is at close to $1 trillion valuation again is this constant encouragement of the public excitement and the idea that they are building and creating the future as they only can do it. And, if you look at that valuation premium as the ability, if they need to raise capital down the road to attract people, that's half the product in addition to batteries and steel. No real reaction today to the split itself. That's probably a good thing. And keep in mind, we're still trading, I guess on a split adjusted basis, what's the high? 400, and now we're just under 300. So it seems as if we're still kind of chopping around this range, held up relatively well compared to some of the other stocks that really, went into moonshot mode during 2021.
Other stocks going to the moon, 2021. Oh, I remember. He's talking about the financial manifestation of the bell curve being real. Shout out to all the investors in every EV SPAC on the planet. Good job, guys. I mean, I tried. I really did.
But still hanging in there fine.
Finally, Craig, we had a talk with Mark Fields a moment ago about EV policy. I mean, Ron Barron on our air earlier today would clearly argue, although to his own benefit, that policy is moving EV's direction and as obviously consequentially in Tesla's direction.
EVs are the future. There's no question. I encourage everybody that's considering buying a new car to go and test drive an EV. I bought an EV. I love my EV. I'll probably never drive a nice vehicle again.
Wouldn't it be funny if he came out of the closet and admitted he's actually driving a Tesla? Now, I don't know what he drives. I don't know for sure. I've got no idea. I'm just saying it'd be kind of funny. For those who don't know, there's a lot of stock analysts who are very bearish on Tesla who themselves actually drive Tesla vehicles. Funniest shit on the planet. Really, by the way. I think Tony Saganagi's a great example, but there's many others. Love the product, hate the stock.
Policy is aligned with the future. And President Biden has done the right thing with the baby or the baby triple B or the infrastructure bill as well. Both of them have driven great support both for EVs and EV infrastructure, incentivizing investment in materials and supply chain. This is what we needed. This is what the United States needed to actually pick up the reins and start leading again. Tesla did this with very little support,
Now, that's a good point. Tesla did it with very little support. Despite what many of the Tesla Q virgins will tell you about the government funding the entire enterprise, let's not even go down that rabbit hole. Tesla took the risk, pioneered, innovated, and paved the way. Not proactivity, but policy is forcing most of the world's legacy automotive manufacturers to follow in Tesla's wake.
And now there's support for the whole industry to run in behind them. That's, again, one of the reasons why I'm pretty skeptical on Tesla. I think you've got some great automotive behemoths they're going to do really well over the next several years.
On this, I could not disagree more. I personally believe these behemoths, legacy automotive manufacturers, over the next few years aren't going to be impressing anyone. They're going to be floundering around, failing miserably, embarrassing themselves, tripping over their own shoelaces, and just demonstrating to the marketplace how incredible and difficult what Tesla accomplished over the last 10, 15 years actually was.
The Mach-E is an awesome car, right? Ted Keynes at Ford is doing great things. If you hear his vision for the spinoff, it's exciting. I think people will have lots of other exciting things to invest in other than Tesla.
Has anyone else noticed? Despite Craig pointing out there's going to be these other opportunities people could invest in that will outperform Tesla in the coming years, these behemoths doing exciting things. And again, he's reiterating there's other opportunities besides Tesla. Has anyone noticed he's not naming these opportunities? Just talking in really vague terms. Well, there's other things that will be better than Tesla, but I'm not going to tell you what they are, even though I'm a stock analyst who's telling you that Tesla's going to underperform. I'm not going to say the names out loud of the companies, the stocks that I believe will do better than Tesla in the coming years. I wonder why that would be. I really do wonder why that is. Wouldn't it make more sense? Craig would at least go, I think Ford stock's going to outperform. I think GM stock's going to outperform. I think VW stock's going to outperform. He's happy to say the word Tesla, Tesla, Tesla and talk Tesla stock and underperforming, but he's not talking about the opportunities he believes will do better than Tesla. This to me is a very big red flag. So let's quickly recap today's video. Elon Musk dropped a massive, in fact an astronomical hint about Tesla's future potential scale. Twitter may be in some seriously deep shit. Dan Ives, unsurprisingly, remains bullish on Tesla, and who would have seen that coming, has incrementally increased his Tesla stock price target for what will no doubt be the first of many incremental price target increases throughout the rest of 2022. And Craig Irwin continues to sheepishly point out that Tesla's not a great opportunity, lots of other companies will outperform, but fails to name any of them. Nothing suspicious there at all. And lastly, don't forget, if you'd like to support the channel and unlock over 100 exclusive videos, my Tesla stock price targets, and loads of other perks, check out the link in the pinned comment or the card in the corner to join Patreon. I'll see you over there. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you want to support the channel and instantly unlock over 100 exclusive videos, plus my 10-year Tesla stock price targets and loads of other perks, including optional access to my Tesla valuation model, join our growing community of thousands of supporters on Patreon with the link in the pinned comment. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. And if you're still watching, you're awesome. Please let me know your thoughts on today's video in the comments below, and click the card on screen now to watch the next video.